afternoon, classmate.
Good afternoon. Good afternoon, ma'am.
Afternoon po.
Yes, yes. Kamu-kamu nag-aunay nga na.
Good afternoon, everyone. I am the first reporter of Group 10. So, managing cost and uncertainty. So, managing cost is the process of planning, controlling, and monitoring costs to ensure that they are in line with the organization budget and objectives. And the uncertainties are a fundamental aspect of life. They arise from a lack of complete information or knowledge about the future or about complex systems. Ulit niyo, ha? So, cost control system. Cost control systems are crucial for organizations to manage their expenses effectively. This system encompasses a set of formal and informal tools and methods designed to handle organization costs. So, ang purpose ng cost control system ay nag-provide sila ng information para sa mga plano o pag-assess ng mga activities during the planning phase and after execution. So, planning and control mode. The planning and control mode is a structured approach that organizations follow to set objectives, compare performance, and make informed decisions. It consists of plan. So, where do we want to go? Example, a retail company planning to expand its market share in a specific geographic region over the next 2 years. So, how do we compare it first? So nga din, mag-conduct na kita ng benchmarking analysis to compare the organization cost structure and financial performance with industry peers. And what is the impact of this decision? So nga din, mag-implement ng cost-cutting measures and mag-assess na kita kung ini ba siya is may potential impact ba sa mga customer or employee and sa overall business sustainability. So nga din nakita sa evaluate. So where are we? So nga di, review na nato sa current market conditions and mag-analyze na kita sa company kung may nabago ba. How are we doing compared to the plan? Nga di, mag-compare na kita ng ato mga project sales for figures outline sa ato mga plano with the actual sales kung i-achieve ba gayud nato ini during a specific period. So what actually happened? So sa pag-conduct nato through analysis of any deviation from the plan is may makita gayud nato na may ma-learn kita from the experience and nakita nato na may improvement sa ato future plan about sa organizations. That's
Uy, pati isa ka mo. Sorry. Next na daw, kabadongga.
Um, the dynamic growth cost changes our strategies for cost containment, avoidance, taxes. So let's begin by helping to our employees advocate towards the cost-driven aspects such as
Hinahin mo, busis.
okay na. So let's begin by delving into our employees' attitude towards the cost-related aspects, such as understanding cost changes, cost attainment, and cost avoidance, and cost reduction.
Dili mabate.
Yan, okay na? So, so why cost change? So costs are influenced by various factors including changes in behavior, inflation, deflation, quantity, purchase, higher taxes, and additional regulation. It's crucial to recognize and adapt to these influences proactively. Next is okay, next. So containment. Cost containment is our strategic approach to minimize cost increase. However, there are certain factors beyond our controls, such as inflation, tax variation, and regulatory changes. Yet, within our scope, we focus on factors like supplier, competition, seasonality, and quantities. Purchase to effective content costs. So, developing in inter-organizational arrangement to optimize our cost containment efforts, we explore inter-organizational arrangement including long-term or single source construct. This enhances stability and efficiency in our supply chain. So, Pakinex. So, cost avoidance and reduction. Moving on to cost avoidance and reduction, these are critical components of our financial strategy. Cost avoidance involves finding acceptable alternatives and substituting lower cost inputs, while cost reduction focuses on lowering current costs. So strategies for cost reductions, benchmarking, comparing our costs against industry standards, and outsourcing, exploring internal expertise to streamline processes, and next is consultant, seeking professional guidance for strategic cost reductions. Sa operation design, evaluating and enhancing internal processes for efficiency. So ang fixed costs, committed and discretionary. Fixed costs are categorized into committed costs, such as plant assets and personnel, structures, depreciation, lease rentals, property, taxes, and staff salaries, and discretionary costs, which include important but optional activities like employee travel, repairs, and maintenance, advertising, research and development, and employee training. So in conclusion, our commitment to cost consciousness is reflected in our employee mindset, understanding cost dynamics, effective cost containment strategies, and proactive approaches to cost avoidance and reduction. So as we navigate the ever-changing business landscape, these principles will guide us towards financial sustainability and success. That's all. Marito guys.
Na.
Bro, Mark Jid, ikaw na. Next.
Sino yung next reporter?
Good afternoon, everyone na. Pati. Hello guys, mabati. Oh,
Bugto-bugto.
Utod-utod ang boses.
ako. Nahinahing ako.
Logro nyo, ikaw na.
Uy, bayot. Ikaw na bayot. Dili mabati. Wala nakaon mo mic, Mark. Wala nakaon mo mic, Mike. Bayot mo mic, wala nakaon. Wala naka-on mo mic, Mark.
Nag-attendance na ka mo.
Sino ang ga-screenshot? Si Anafer. Pwede ako ka-screenshot gayon. Okay po. Tugod niyo wala mo mic naka-off.
Amo na sabihin na link para sa drama.
Dili, Carl. Ano, proceed sa next reporter? Okay, ma-burn out. Trabaho ni sa amo. Pag-report pa ako.
Uy, pag-function na ka mo, uno na.
Burnout.
Padakuan naan. An palihog na apadakuan. Magsugod na ako. Mabati ako.
Yes, sir.
So, good afternoon, everyone. My name is Chandel Eliula, and today I'm going to discuss to you my assigned topic, which is inventory management. Next na palihugan, next pagayon. So, inventory management refers to the process of ordering, storing, using, and selling a company's inventory. This includes the management of raw materials, components, and finished products, as well as warehousing and processing of such items. So inventory management, it refers to the process of overseeing and controlling the flow of goods or materials within a business. So, example na niyon, bali is pag-record ng mga yagamit na materials o yung mga yabaligya na products ng isa ka business. Inventory management helps a business to ensure to have enough stock on hand and identify when there's a shortage. Next palihog, accounting for inventory. So inventory represents a current asset since a company typically intends to sell its finished goods within a short amount of time, typically a year. Inventory has to be physically counted or measured before it can be put on a balance sheet. Companies typically maintain sophisticated inventory management system capable of tracking real-time inventory levels. So, accounting for inventory is basically yon ang inventory nag-represent as current assets. And before recording it to a balance sheet, it must be physically counted and measured. Additionally, pag mag-record ng inventory item sa balance sheet, it is listed by the price the goods were purchased, not the price of the goods are selling for. Kumbaga, i-record ang amount ng mga goods based sa palit ng business, dili ang presyo ng paninda. Next na palihugan. So, here are the 4 categories of an inventory management. First is the raw materials. Ay, kasayod na sa balan ka mo ng raw materials, di ba? So, raw materials represent a various materials a company purchases for its production process. These materials must undergo significant work before a company can transform them into a finished good and ready for sale. So, these raw materials represent for the production process value in order to create a finished good. Then the second is the work in process, also known as goods in process. So it represents the raw materials in the process of being transformed into a finished product. So ito nga palit na raw materials is i-transform bali or like iproseso rather para makuan to create a finished product. Then the third is finished goods. So amo na ini ang result after the process. And finished goods are completed products readily available for sale to a company's customer. And lastly, the merchandise. It represents a finished goods a company buys from a supplier for a future resale. So ang merchandise bali is kumbaga amo ini ang mga finished goods and products na gina-acquire ng isa ka ng companies gikan sa suppliers para ibaligya. Next na palihugan. So there are 4 inventory management methods. So the first one is just in time. So this method allows company to save significant amounts of money and reduce waste by keeping only the inventory they need to produce and sell products. So, ang GIP management, ang goal value niya is to eliminate waste, reduce carrying costs, and improve professional efficiency. So the second method is materials requirement planning, or MRP. This method is sales forecast dependent, meaning that manufacturers must have accurate sales records to enable accurate planning of inventory needs and to communicate those needs with material suppliers in a timely manner. So aside from the meaning ng yaon nga sa PPT, ang material requirement planning kay makatabang sa business to plan and control materials needed for production. MRP is designed to ensure that the right materials are available at the right time, in the right quantities, and the right location. And the objective or the main purpose or objectives of this is to optimize inventory levels while meeting production requirements and minimizing costs. And the third method is economic order quantity or EOQ. So this model is used in inventory management by calculating the number of units a company should add to its inventory with each batch order to reduce the total cost of its inventory while assuming constant consumer demand. The cost of inventory in the model include holding and step-up costs. So this method is used in inventory management to determine the optimal order quantity that minimizes the total cost of inventory. So makatabang sa inisiya sa mga businesses to strike a balance between the cost of holding inventory and the cost of ordering more. And the last method in inventory management is day sales of inventory or DSI. So this financial ratio indicates the average time in days that a company takes to return its inventory, including goods that are work in progress into sales. So DSI is also known as the average age of inventory, days inventory outstanding or DIO, days in inventory or DII, days sales in inventory or days inventory, and is interpreted in multiple ways. So the days sales of inventory or DSI is a financial metric used to measure the average number of days it takes for a company to sell its inventory. So DSI provides insights into how efficiently a company manages its inventory and how quickly it can convert inventory into sales. Additionally, by monitoring DSI over time, ang company ma-identify nila ang trends na ibali hitabo sa kuman and can make informed decision regarding inventory levels and production planning as well as sales strategies. That's all, everyone. Thank you.
Good afternoon, everyone. I am the next reporter, Mibelin Siracho, and the next topic is production management. Production management is the process of controlling a company's operations to provide the services and products it wants to produce. It comprises organizing, carrying out, and managing processes that transform raw resources into completed products and services. Production management involves in organizing, planning, and executing product activities that transform from raw resources into completed products. Next slide, please. Palihog ko, madam. The functions of production management. The first is choose design and product. Production management aids in the organization's choice of the appropriate product for production as well as the appropriate design to satisfy client expectations and still be cost-effective. Products must undergo a thorough assessment. And the second is production controlling and management. It becomes crucial to select the appropriate production procedures for a certain product, making decisions on the best kind of machinery and technology, the necessary capital expenditure, and other issues is necessary before manufacturing planning is required. And also, the production manager is in charge of production control. The actual procedure is compared and contrasted with the established blueprint to map out any essential deviations from original plan and to identify and fix any loss. And the last is machine maintenance and replacement. To guarantee the effective and seamless operation of production processes, production management is responsible for the maintenance and replacement of machinery and equipment. To avoid speed breaks and production halts, the production manager and crew take care of this. Next slide po. Importance of production management reduces the possibility of product failure. The first is in order to oppress the market and lower the likelihood of failure, a clear roadmap should be prepared along with the data and assumptions. For this, the manager is responsible. They must prepare for it for some assumptions. And the second is a product will be less likely to fail if its designers are aware of the demands and wants of the market. Amo sa gadyon dili kita makakuan depende sa kung ang designer is ibaw siya ng demands ng mga customers, makuan sa gid kita na dili siya lang na likely to fail. And the next is product management reduces failure but it can't guarantee success like anything else. Since dili sa kita makapredict na kung ang ato product is great success jud siya, pero makareduce siya ng failure. Next slide po. And the conclusion, it is tempting to characterize production management as a mixture of other positions because it is a relatively young subject and the function may vary so much from organization to organization. Sabotable na science siya, guys. Thank you po.
Good afternoon, everyone. Merasol, share screen na ay. Good afternoon, everyone. I am Margid Logroño, and we're going to continue the lesson for the chapter 10. Cash management issue. So, what is cash management? It refers to challenges or problems related to the handling, control, and optimization of a company's cash flow. This can involve issues such as inefficient use of funds, difficulty in forecasting cash needs, or problems with collections and disbursements. Effectively managing cash is crucial for ensuring a business liquidity and financial stability. Mabati ba niyo, guys? Hello. Kasi nakatulog na kayo. So, what are the causes of a cash management issue? So, typically, a poor understanding of the cash flow cycle, profit versus cash, lack of cash management skills, and bad capital investments are the reasons for failing at cash management. So, one of the example of cash management issue is the cash level. So, cash level refers to the amount of cash that a company, investment fund, or bank has on hand. It's also important for meeting unexpected costs and taking advantage of investment opportunities. So, how does cash level become an issue for cash management? So, cash levels can become a cash management issue for various reasons. So, one of the reasons is if an organization holds too much cash, it might miss out on potential investment opportunities, leading to lower returns. On the other hand, if cash levels are too low, the company may struggle to meet its short-term obligations, risking financial stability. So second is there is sufficient to cover all needs. It refers to maintaining an appropriate cash balance that can meet the financial obligations and requirements of a company. How does it become a cash? How has it become a cash management issue? Example: debt obligations of a company. If a company has borrowed money or has outstanding debt, it needs to allocate a portion of its cash to meet debt obligations, such as interest payments or loan repayments. If cash levels are not sufficient to cover these obligations, it can result in penalties, increased interest costs, or even default. So the third is low enough to allow for alternative uses of cash. When cash levels become low, when cash levels become low, it can indeed become a cash management issue. This is because having a low amount of cash can limit a company's or individual's ability to respond to unexpected expenses or investment opportunities. So let us proceed to the banking relationships. So banking relationship refers to the connection between a bank and its customers. It's not just about having an account with a bank, but it's more about the overall interaction and engagement between the bank and the customer. This relationship can include a wide range of financial services such as checking and savings accounts, loans, credit cards, and investment services. The quality of banking relationship can greatly affect the customer's satisfaction and loyalty to the bank. So, one of the banking relationships is the loan eligibility. Loan eligibility refers to the criteria that individuals or businesses must meet in order to qualify for a loan from a financial institutions. Second is loan limits. Loan limits refers to the maximum amount of money that a lender is willing to lend to a borrower for a specific type of loan. So, ang ikatulo is credit terms. Credit terms refers to the conditions and terms under which credit is extended to a borrower by a lender. These terms outline the details of the credit agreement, including repayment terms, interest rates, fees, and any other conditions that both parties must adhere to. And let's move on to the bank assets. So, credit history. Credit history specifically refers to the record of an individual's or a company's borrowing and repayment activities, including details about loans, credit cards, and other credit loans, as well as their payment history. The ability to generate cash flow. It refers to an entity's capacity to generate cash inflows from its operations, investments, and financing activities. And the quality of collateral. It refers to the value and condition of an asset that a borrower offers as a way for a lender to secure the loan. If the borrower fails to repay the loan, the lender can seize the collateral and sell it to recoup some or all of its losses. For example, you go to a bank and apply for a business loan. The bank, as a lender, wants to ensure that it will get its money back, so it's asked for collateral. So you offer your house as a collateral. Next slide. So let us proceed to the uncertainty. So uncertainty is it is the lack of certainty or predictability in various aspects of business operations that can make it difficult for managers to plan, strategize, and make informed decisions. Cost management uncertainty refers to the challenges and unpredictability associated with estimating, controlling, and managing costs in various business activities or projects. So there are causes of the uncertainty. So how to deal with the uncertainty of a business? So this means considering the possibility of unexpected events, changes in market conditions, or other factors that could affect the cost of a project or operation. Explicitly factor uncertainty into estimates of future costs. Ang kadua is structure costs, so automatically adjust to uncertainty outcomes. Use options and forward contracts to mitigate uncertainty. Purchase influence to cover unexpected occurrence. Next slide. Next slide. So these are the potential ethical issues in a business. So first, refusing to grant sales price decrease when costs decline. Artificially contracting with suppliers to force price increase to customers, acquiring excessive quantities of post to generate favorable price variances, acquiring counterfeit goods to obtain the lower price, outsourcing production or procurement to companies with unacceptable labor or environmental practices. Slowing payments to creditors to generate more investments returns, and manipulating, falsifying financial statements to obtain credit or lower interest rates on borrowed funds. Sorry kay nawara ka dali ang signal. That is all for our discussion, and thank you.